Hello, guys, and welcome to end of market review for Monday, the 10th of April. And today we just executed the 13th trade. So, what does that mean? 7 trades left, right? Today is Monday, so we have about 4 days left in the week. So, there's a chance, there's a high probability of us taking four more trades. So, maybe by the end of this week, we'll have just 3 trades left. So, we'll be very, very close to achieving our goal. Remember, the goal is to take 20 trades using the same model and not really, the goal is not a profit target or a profit amount, right? The goal is simply just taking 20 trades by executing the same model, right? To see the outcome, right? So we are investigating something here, right? Remember, we backtested something and we're investigating to see, okay, is this going to pan out? Can we create an edge using this? So far, so good. We've been creating an edge. Today we had a winning trade. So currently we are up 5R. We're back up to 5R. Remember, we got up to 6R. Then we went back to, when we went to 6R, we took 3 losses in a row, right? We went back to 5R, then we went to 4R, then we went to 3R. And now we've got the 2R trade, which takes us back to what? 5R. And this is the 13th trade. So what does that mean, right? We have 7 more trades to take. So in the first 10 trades, we had what? 5 wins and 5 losses, right? So far for the second set of 10, we've had 2 losses and now our first win, right? So that's to say that in this second set of 10, if we also have a 50% strike rate in this second set of 10, right, that's going to be a total of 10 wins, 10 losses, right? This is all hypothetical. This is not, we don't know if that's what's actually going to happen. But we have 10 wins and 10 losses, then that's 20R minus 10R, which will give us like a 10R outcome, right? I'm risking 0.5%, that's going to be 5%. But that's by the way, right? So moving on, just want to, so for the trade that we took today, I think it's very, very easy to see, right? This trade was executed by 2:30 on the dot. And I think like we've been executing trades on 2:30 back to back for the past maybe the last 3 trades. I think the last 3 trades have been like executed at 2:30, exactly by 2:30. So I don't know if that's a coincidence. I don't know why that's happening, but it has been repeating. Obviously, you can see that I'm not trying to like get scared of executing trades because it's 2:30. Because I've had trades that I've executed by 2:30 and they ended in a loss. I've also had trades that I executed at 2:30 that ended in a win. So you can't say, okay, because trades that we execute by 2:30 ends in a win, then every trade have no. We just take the trades as we see the setups, right? Even today, I saw this setup and a part of me did not want to take this trade, right? A part of me didn't want to take the trade, but I had to execute the trade. Why? It met my criteria. Not taking the trade is me betraying myself because then if I don't take the trade, what I'm trying to tell myself is we might lose this trade. And because we might lose this trade, let me not take it. Let me wait for a better setup. What better setup, right? What better setup? It's not about having a better setup. The technical, what I'm trying to prove with this is like technicals is not everything. It's actually the battle against your mind, the battle with your mind. Because if I didn't take this trade, I could have been frustrated that, oh, this trade ran to 2R and I didn't take the trade. And then even when a new setup forms, I might not, let's say a new setup forms, I take that setup, it ends up in a loss, you know, who am I going to end up blaming? End up blaming the market and all of that. So that's not the way we want to go about it. That's not the way we want to go about it. So executed this trade, very glad that I executed the trade, not because of the outcome, not because it was a winning trade, but because it was the plan. It was according to our plan. Everything met the criteria. So I had to take that trade. Now let's go to the higher time frame. Let's start from the 4-hour time frame to look at, what happened with gold today. What happened with gold today? Am I on the right time frame? Yeah. Okay. So gold. Let's look at the daily to see a more cleaner price action. Can you see? Guys, we're still seeing price dropping to the downside. Obviously, we have this candle here, all right? And price has come into this candle right here, this candle right here. So is it that this candle is going to act as another block or a breaker block, right? So again, just go to ICT's channel to understand what that is, right? So for a breaker block, we want to see something like this, right? And then pull down. We have this shaded area is from the weekly time frame, right? Let me go up to the weekly time frame. So we have a fair value gap on the weekly time frame, right? We have a daily order block, and then we have a monthly order block, sorry, and then a weekly fair value gap. So this is a good area for price to pull into, right? If price wants to keep coming down, this could be a good area for price to pull into. Why? It's going to tap into that monthly order block, dip into the monthly order block, come into this weekly fair value gap here, right? And on the lower time frames, such as the 4 hour, you can see we have sell side liquidity, you can see we have equal lows, you can see we have other blocks here, right? So price could really come into this fair value gap, right? On the weekly time frame, this weekly fair value gap, as well as we have an order block here, and we have a daily order block at this level too. So there's a lot of things in here that price could, use. And again, like I said, this could become the daily order, the breaker block. So we could see price pull down below that, you know, give price a retest and then come into here. Obviously, I'm not going to be trading that because that's not my strategy, right? But I love to be able to like look at price and say, okay, we could see this, we could see that, right? So we're seeing price coming down. Obviously, we're seeing rejections off of this zone, right? Which means what people are trying to, let me not say people, but I know that retail is trying to trade this, right? When you see a bullish run like this and then price coming back here, if we're looking at the market with through the lens of through what we are learning from ICT, right, then I have to call it the way it is, right? There's obviously people that are trying to go long here, but what they're not understanding is when you see a candle like this, institutional sponsorship is here, right? But at the same time, we have a lot of liquidity here, this relative equal lows. We also have this sell side liquidity. Remember, we have trend line liquidity, just like this, right? We have trend line liquidity here. So what we've seen price do is price has gone for buy side, price has taken buy side liquidity. When price takes buy side liquidity, what's next? Sell side, right? So we have sell side, order block, fair value gap, right? So we have imbalance as well as liquidity for price to target. So it's highly likely to see price maybe fall into here, right? We also have buy side liquidity above these highs in case price wants to run these highs, right? So if price wants to run these highs and then drop down, then there's no problem, right? And we're not here to predict. Obviously, we'll do a little bit of prediction, but as you know, we're not trading based on the predictions, we're trading based on our entry model. Now you can see what I have marked out here. New week opening gap high, new week opening gap low, right? So price, we didn't trade on Friday because like Friday was like Easter, um, Good Friday. So Good Friday, so the markets were even closed, right? So there was no movement on gold. There was no movement at all on gold. Um, so Sunday we had a gap. We had a gap open up on Sunday. So this was the high of that gap for the new week, and this was the high of the gap. This was the low of the gap, right? And you can see what price did here. Price retraced into that gap, right? The new week opening gap low, right? Price retraced into it before pulling down, right? So this would be a level of resistance, right? This should be if you want to see this level hold at the level of resistance, so price will stab into it multiple times as much as it wants, maybe before it breaks below here, and then continue down, right? And this equal lows will be a great target, a great first target. This equal lows here, right? To get that draw liquidity. Please do not take this as a signal. Do not take this as a signal. If you want to learn how ICT trades, please go and watch his content, right? I'm not even advocating anybody to trade with the strategy because, like I said, it's not really about the technicals. It's not really about the technicals. Making money from trading is not really about the technicals, right? There's so much more that goes into it than just technical analysis, right? So I'm just learning for the sake of learning. I do have my trading model, which I'm showing you guys is a very simple, very simple, right? There's nothing so complicated about how I trade, right? All you have to do is have the discipline to put the risk on, have the risk discipline to take that risk, to take that trade, to put money in the market, right? It's not about it's not really about complicating the technicals, right? It's all about building a model that you understand that has an edge. And you're seeing me, I'm trying to prove whether whether this model that I backtested, whether it has an edge. And I'm not proving it to you, I'm proving it to myself. Because if I can create an edge with something as simple as this, then I don't think I would want to really complicate it. Even if I do learn, I'm not just going to throw everything into what I'm learning and start to trade with that. Right? So this was my trade. Very simple trade. I don't know even someone could be watching this for the first time. So let me break it down. So I have fair value gap on this candle right here. And how do I know that this is my fair value gap? And why did I choose this candle and not this candle, right? So this is how I look at it. I look at the three candles moving in one direction. So we have one, two, three, right? One, two, three. So I pick the middle one, right? And why is that? You can see the low of this candle. You can see the high of this candle. You can see that this candle and this candle does not interact, right? So there's a gap. This candle, there's a gap within the body of this candle, a gap within the low of this candle and the high of this candle. So what I want to see price do is, I want to see price come back, fill that gap. You can see price did it here. Boom. Fill the gap here. Fill the gap here. Right? Made a push down, but I didn't take any of these trades. Why? They were not in my time window. When is my time window? From 2:30. You can see I have it marked out here with this vertical line. Right? Now we came for a third move into it by 2:30. That's when I took the trade. Executed on the model by 2:30. Price delivered 1 to 2 R. Price delivered 2 R. Boom. Simple. So that's my trade. That was my trade for today. So, well, there's really not much to say, right? This is the 13th trade, and so far I think I have about 6 wins, 6 wins and 7 losses. Yes, 6 wins and 7 losses. So you can do the math by yourself, right? 6 wins, risking 6 wins, and for every win we'll get 2R. So that's 12, 12R, and then 7 losses. So 12 minus 7, 5R. So currently up 5R after taking 13 trades. So 13 trades, 6 wins, 7 losses. That's not so bad, right? Not so bad. So that's really all. That's really all I have. I don't really think there's so much to cover, right? I don't really think there's so much to cover. We just have to keep going. And you can see how the strategy is really straightforward. And this is what I want people to understand. Whoever is watching this, right? Whatever strategy you're building, whatever trading plan you're building, you should have you need to test it to see if it has an edge, right? You need to test it to make sure you have an edge. If you don't have an edge, man, what are you doing? You need to make sure you have an edge. You need to test it. You need to back test. You need to forward test. You need to demo test before you take it to the live market, right? And if it works, in the back testing, if it works in the demo testing, if it works in the forward testing, what's the next thing you need to do when you take it to the live? You can't go live and then start doubting yourself. You can't go live and start doubting yourself. So, you know, this helps like eliminate a lot of emotions, right? And look at things. So at least by the time you collect this data, after collecting data like this, after collecting data like this, after collecting data like this, to the when you go to live markets and you're trading, even if your emotions start to like try to cloud your judgment and whatnot, you can come back to this data and look at it and be like, this is how I was executing and it was profitable. So what's the difference? Why am I profitable on the demo? Why was I profitable when I was forward testing, and now that I've gone to a live account, why am I no longer profitable? All right, those are the things you need to look at. You need to look at those things, and then, you know, that's just it. Then you understand that your emotions are getting in the way. Once you can find out that your emotions are getting in the way, then you can know what to do about it. Right? So it's very simple, very straightforward. So we're going to see what happens in the next seven trades. It's really, really exciting. Things are getting really exciting, right? This is an exciting experiment, and a lot of people don't do this. I don't know why a lot of people don't do this. Everybody comes in the market looking for that money, but like there's work. This is part of the work, right? And imagine after taking the 20 trades, we don't come out profitable. We have to go back to the drawing board, build another model, build new rules, back test again, forward test again, and do that until you find something that has an edge. And when we find something that has an edge, then we have to execute that in the live market. We have to execute in the live market. And even if we see, okay, because the market is trending right now, right? The market is trending right now. So that might be the reason why this model works. So what happens when the market starts to consolidate? What happens when the market is moving sideways? How is this strategy still going to work? So that's something we still have to like experience. Or let's say when the market is so volatile, like let's say there's an economic event that makes gold to be so bearish and so volatile, or to be very bullish and very volatile. Are these setups still going to present themselves? You know, so we don't know. We don't know. So these are things we're going to find out along the way. So very exciting, very exciting, very exciting. So I think that's basically it. And I'll see you in the next episode.